Hello guys, Steve Ducks here. Welcome to this YouTube videos. I know I haven't done my YouTube videos for a while since the market has been very crazy, massive amount of volume, and it's very difficult to predict. So overall, of my trading performance, I've made in total of $3 million to $4 million on GME and AMC alone. Let's get into those two tickers and then we'll talk about other tickers that was sympathy play as well. So hopefully you can enjoy these videos. I made tons of mistakes. I should have made much more money. Hopefully you can learn some mistakes from me. I also hope that you traded those two tickers well enough that you didn't get wiped out by the volatility. So in this video, it's very important to understand how to really manage your risk and also how to avoid those type of chances to get blow up in one day. First of all, let's go over AMC. This is the main play that happened in the last 2 weeks. And you can see that this one actually ran out before, starting from the 14 area. 14 is the breakout level, then it ran all the way to 72. Now, this ticker, the reason why it squeezed so many people, because this is normally when you have a $1 billion cap and you have a 400 million float, that's a lot of shares. Basically, you need to buy the entire float to make sure that the stock can spike 100% or even more. So in this case, AMC was basically spiking around 20% to 50% per day, and the highest squeezing percentage happened on Thursday, which is around June 2nd. It squeezed over 100%. So in terms of that type of range, this is probably the maximum squeezing percentage I've ever seen in this type of market cap in the last 10 years. And I was very amazed by it. And I thought that into the Thursday gap down, you can see right here, it went from 44 to 36. Now I thought it would be a decent odds to short in around 40, risking the pre-market high for a decent shorting opportunity. But it turns out that the stock was attracting way too much volume. You traded it 700 million volume in one day. So that's not very ideal for shorting. And stock basically extended from 36 to 72. Then following the next day, that the stock actually gapped down. Now this is, I realized I got the opportunity to short into it. So for the last couple of days, I had one attempt shorting around the $33 area, but it wasn't a very good odds because there is no consolidations, there is tons of volume. So basically when the stock tends to favor the short side, the stock needs to lose liquidity. And AMC was actually gaining liquidity when it was actually dropping. So that's not very ideal for that day. Now going into the final day. So in the pre-market, the stock actually dropped through the support. You can see that the initial support is around 60 to 72. And since I cracked that support, I was aiming to short into a morning bounce using this resistance as my guide. So I entered around 62, covered half around 41-ish, then added around 51, then added 52, then added 55. So that was 3 add, and they covered when stock was trying to break down, so around $39-ish. So for that specific action, I made $2 million off it immediately. Then I was also playing GME because I know that AMC was leading GME momentum. In this way, I managed to capitalize on GME's gain. I made, I think, around anywhere between 200,000 to 400,000 of those 2 morning action. Now, the follow-up action actually surprised me a little bit. So once I added and I shorted it, my average actually got drawn down to all the way to 53. Now, when the stock tends to bounce back, I was hesitating that if I should add or not, because normally that stock bounce about 50% from the panic, but in this case, they announced a completed offering news around 1 p.m. So the stock actually squeezed from the 50% area, which is around 48 to 53, 56. Then the stock starts to squeeze again. So in this case, I exited my entire positions. I think I took a small loss, but I still managed to capitalize $3 million of those 2 tickers. Now, following to the next day, that the stock actually came down and started to form its consolidations. So I think in the following next week, we will have a decent opportunities to short around the $50 consolidation area. And I think the momentum has already gone, and this will be fading all the way back to the $30 area, maybe 31, 32. There's massive amount of support around 20. So there's still tons of range to short into, and for people that's going long on AMC and going short on AMC, it doesn't really matter which side you're on. It's because that there is always a balance between the bid and ask. If the stock goes up way too fast, there's always balance that it will cause the stock to break down to at least meet that balance point before it go up to the next level. So for people who are just blindly going long and buying at $72, always think about there's going to be a balance point between the sells and buy, and don't actually chase into the strength and don't short into weaknesses, because those are the typical mistakes that people tend to make. So I personally did not expect that AMC could come back from that massive drop and actually came back to test its high. So I made a mistake from there. Other than that, there's tons of data for you to track, because GME got halted and they prohibited Robinhood people to actually buy in that day. So I wasn't very sure what's the maximum dollar block for this type of market. But on AMC, there's no halting. It's pretty much natural development, especially on the chart. So in this case, you can track your data and to figure out what's your edge, and also just by looking at the chart actions to learn that in the next time when similar ticker like AMC happens, you know exactly what to do. So that'll be all the recaps for this week. Hopefully you guys can learn something from my mistakes, and also make sure to stay safe, and I will see you guys in the next video.